All right. Let's get the stream rolling. Get it rolling. All right. So I'm live on Discord. Let's switch back to TradingView. I was looking at potentially taking this, but I felt, nah, I already made some money during London. And yeah, this just signaled sweep to me, like, and then that next bullish candle for a nice quick continuation scalp, but that's not worth it, especially not since I've been trying something new recently. Guys, I'm trading with TraderVate and Apex Trader Funding and Take Profit Trader when I'm trading off screen, or not on stream basically. And I really like it because I don't know, I could place a limit order right here at this exact price level, and if it hits that to the tick, 90% of the time I end up getting filled. That's what I really like about trading futures. But I've recently decided to sign up with Funding Pips, which is a CFD account, a CFD prop firm. And why, you might be asking? It's pretty simple, because the rules to get funded and afterwards to get your payouts are much easier comparing it to a futures funding firm. So yeah, and that's basically the entire reasoning. Let's see, let's wait for a few people to join. Hey, welcome from Germany. Let me just put the referral link of Funding Pips in here. And trust me, I've done my research on why I'm choosing Funding Pips. If I go over here to my CFD prop firms Google Sheet, I compared all the different firms with each other, so I didn't just make an impulsive decision. I compared all of these, and especially their spreads on indices. And right here on the indices list, we can see that Funding Pips comes out with the lowest spread. And that's the only issue that we have trading CFD, the S&P 500 index. We don't have to worry about that if we sign up with Take Profit Trader or Apex. That's really cool. That's why I still will continue to trade futures. Let's see, now it's logging me in. Because of the reasons I just stated. I could place my limit order right here and I wouldn't have to worry about spread actually getting me filled. So that's one huge advantage, but it's no reason to not trade with a CFD funding firm. Here over on our Discord, I made a good comparison. So there are, even if they say there's only one phase on the Apex challenge or Take Profit Trader challenge, it's really a two-phase challenge. Phase 1 usually consists of a 6% profit target and a 5% drawdown ratio. That's a 1.2 target to drawdown ratio in order to pass stage number 1. If we take a look at a regular CFD challenge, we have an 8% target and a 10% static max drawdown. While the futures challenge is always trailing. Apex actually has a live trailing drawdown, so if you make profit, it automatically moves up with you. And that's making it much harder, and that also depends on your system. So if we compare, that's a good measurement on how easy it is to pass a challenge. Apex and the regular futures challenge has a 1.2 target to drawdown ratio, whereas the Funding Pips challenge comes in with a 0.8 target to drawdown ratio. And we also have to include that this ratio is fixed. Let's say I'm up $500 on my Funding Pips challenge. I could then theoretically lose 11% before I blow my account or basically blow the challenge. Whereas with an Apex or Take Profit Trader challenge, that would be following me, my 5% trailing drawdown, like my shadow is following me around if I'm walking through light. It's a good comparison. In phase 2, the target to drawdown ratio is actually even less. It's only 0.5, so 5% target, 10% drawdown. That really gives you room to breathe. Whereas here we have a 1.0 target to drawdown ratio. And I'm calling it a phase 2 because you can request a payout in phase 2. Let's say you're starting out with 50k with a Take Profit Trader challenge. You can request a payout on day 1, but you're gonna lose parts of your trailing drawdown, your 5% drawdown. So let's say you make 1% profit on your funded account with Take Profit Trader, and you cash that out. Now you only have 4% of trailing drawdown left, which is not the worst, but I mean, if you end up in a losing streak, which is possible, you don't want to do that. You want to get above your target in phase 2, and that's your little safety cushion. And once you're above that, you withdraw your profits. That's usually how people approach it. So yeah, overall, I'd say it's going to be interesting because theoretically the challenge is easier to pass, but I want to test how much of a difference a static drawdown makes compared to a trailing drawdown. Doesn't matter if it's end of day trailing or if it's intraday live trailing like with Apex. And yeah, we started earlier this morning on the Discord with all the VIP members right in here. Let me go over to the VIP chat. And we started out with the trade idea right here, where we go here, running in profits. Oh, we wrote lots. So we could be forming a low here, at least for the short to medium term. Wait for the confirmation shift, breaker block plus fair value gap right here. That's what we were looking at. Potential market structure shift for the continuation higher. I got in long at the midnight level, targeting buy side, and then the London Open came around. We kept taking out these equal highs, and then I was eyeing those 3 equal highs right here to see what happens once we clear that area. London opened up, we got close to it, and then we just consolidated for a while, but eventually we have hit that target. Unfortunately, I had my target set a little bit higher, but I have moved my stop already to break even. Then I alerted everyone to get out once we saw this volume imbalance in case they're still in. Yeah, and after this volume imbalance, we kept on going with the conversation inside the VIP chat. Right here, we had a new market structure shift paired with a bearish fair value gap, so I hopped in short again, also on the CFD challenge. But once again, I didn't hit my 1-to-1 or 2-to-1 risk to reward. We got a bounce off here, so that's when I started to alert that we could be, potentially see a seek and destroy formation and reverse immediately back to buy side. That's essentially what happened. Next candle, a new displacement to the upside. So I entered one last time, break even, trying it one more time on my CFD challenge. But unfortunately, with the spread on my CFD challenge, I've already been in some drawdown, but eventually I have hit my target, and just because of how we have been moving previously, I didn't really want to just move my stop to break even. I'd much rather walk home with 4 points in profit and call it a session. Come back from New York, see what opportunities are presented. And I usually don't take 3 trades in a session, but if the first 2 trades both end up to be break-even trades, I'm happy to, because I still have my risk allowance. So yep, there we are. Now we are inside the New York session. And we're rallying to the upside. Let me take a look at NQ here. NQ is almost already at the 50% here. Of this entire range. Yeah, almost at the 50%. Let's take a look at where ES is, because I'm mainly focusing on ES. Alright, so on the 1 hour time frame, we took out the previous day's low and the current low of the week. Here, Monday's sell side. We cleared both that yesterday during the sell-off. And yeah, right now we have 5 more minutes left before 9 a.m. We're above a hourly bearish fair value gap, but this didn't really matter. And the next fair value gap we'd be looking at would be all the way up here. But first I want to see if we, let's go to the 15 minute, can push through yesterday's volume point of control right here around this consolidation. If we can push through that, we could potentially look for higher prices. In terms of buy side, there really isn't another short-term high up until 45.74. But right now, we're not looking like we're gonna reverse soon. We're still putting in place volume imbalances after volume imbalance. Targets to the downside for me would be the previous week's low coming in at 4544. NQ has already hit that, and now we're moving away from that. I was watching it at the 8:30 news. So right here, 8:30 news, it looked like we're gonna shift structure. I was ready to execute. I've got MT5 open right here. Those were my executions this morning. And yeah, here that's exactly why I closed the position. Then we continue to use the fair value gap to go higher. But I prefer just getting out of the trade. I'm not really a swing trader. I'm not expecting these big moves to happen. I'm fine with making my $500 and calling it a session. But that's also a nice thing. So now with CFDs, if I want to enter, I'm theoretically able to enter 1.5 mini contracts or 1.25 mini contracts, because yeah, I can use the lot size calculator here back from the Forex days, where I can, let's say I wanna let it load here quickly. Yeah, let's say I entered right here on this bullish fair value gap with my stop loss down here. Could modify that and it automatically calculates my risk for me. A little bit easier for risk management. And right here you see I basically enter with 1.32 lots. And yeah, you can compare it to 1.32 mini contracts basically. But you have the freedom of decimals for better risk management. But yeah, that's pretty much it. I like that you could also take partials and scale out of your position. I'm just getting used to that. Like I said, I haven't been trading CFDs for a while. And that's the spread I have to deal with. That's currently a 3 pip spread. So a 3 tick. We could translate that over to the futures challenge or the futures trading right here. So we usually have a 3 tick spread. 1, 2, 3. 1, 2, 3. So something like this. It's not the end of the world. I mean, you just have to give your longs, if you have a fixed stop loss, more room to breathe, and maybe trying to be less precise with your limit orders, because it could hit your limit order. Let's say, for example, we want to get in long right around here on this fair value gap. We would have to make sure that our limit order is right at the high of the fair value gap, because there's no guarantee that even this retracement into the fair value gap would have given us the fill because of the spread. So you're either going to do a market execution, which is going to be less precise, but you would just have to live with that. But therefore you would get a, theoretically, if you got the skills, an easier challenge to pass, and also an easier time, just more room to breathe. 10% static max drawdown. So on that 50k challenge that I purchased yesterday, only way I failed is if my account balance goes below 45 grand. Currently sitting at 50 grand. I like that they have weekly payouts, funding pips. That's also a big upside if we compare it to all the other ones. Weekly payouts, I can choose bank transfer and crypto. It's the cheapest. Even without a discount, the cheapest CFD funding firm. You can only trade on MT5 actually. I would have to change that. MT5. They're relatively new, but they're gaining a lot of popularity. They have good leverage and no commission if you trade indices. So $0 commissions per lot if you trade indices. Only if you trade currencies, then you pay a $4 per lot commission, but you also get a super small spread on EU therefore. But I basically confirmed funding pips with FTMO. FTMO you also don't pay commission, but the spread is usually 1 pip larger and the challenge is more expensive, so I decided to, because spread is an issue if you trade CFDs, and if you're trying to be as precise as I am sometimes with my future executions, I'm gonna have as less headaches as possible and just try to get on with it. They have a 13% target before you get funded, and then you can request payouts once you pass that phase 2. Very similar, like I explained, compared to the future challenges, where marketing wise there's only a 1-step challenge, then you pay the activation fee, and then you're in phase 2. With some future funding firms like Take Profit Trader or Trade Day, you can immediately request a payout, but you lose your trading drawdown. That's the issue. And if you pass phase 2, you go into your master account, and once you make 1% profit, you can pay that out immediately. And another cool thing is you get the refund of your challenge. So while you're with Apex or Take Profit Trader, you have invested your initial account fee. That's a monthly basis. With CFD challenges, that's also another plus point on the pro-con list. You have unlimited time to pass the challenge. Yes, initially they're a little bit more expensive. I paid $212 for the challenge, for the 50k challenge. They're more expensive, but if you pass it, you get a 100% refund with your first payout. You wouldn't get that with a futures funding firm. You would have to offset that initial investment with your first payout. Let's see if we have any questions regarding that. Hi, Minas. So that's the cool thing. You don't have a time limit, unlimited trading days. You don't have a minimum amount of trading days. You have a 8% profit target and a 5% profit target in phase 2. So that's 2% more profit target compared to the typical Apex Trader funding challenge, or what I would recommend more would be Take Profit Trader. Right here. How it works. Sign out. Here with Take Profit Trader. You have a, let's scroll down here, come on. Where's that? Oh, there we are. 50k account, you have a 6% profit target and a 4% drawdown limit. 4% and 6% target compared to a 8% target and 10% drawdown. I already made the comparison, like I said yesterday on the Discord. 8% target, 10% drawdown. Let's say 0.8 target to drawdown ratio compared to this. This is how you can compare different companies with each other. All right, let's see where we're at on the S&P. We are above last week's new week opening gap. Is that correct? Yeah, previous week, new week's opening gap. We're inside now our high volume area from yesterday. What's the time? It's 9 a.m. So that's a new hourly candle. We closed above our 1 hour bearish fair value gap, turning it into a inversion fair value gap now. Next buy side would be right up here. We don't have another hourly fair value gap. Let's check out the 4-hour chart. On the 4-hour chart, we have a 4-hour fair value gap right here. And we're still in this, whipsaw, seek and destroy, consolidation, price pattern right up here at the high after we saw this major expansion to the upside. We'll see if NFP, not NFT, is going to change that on tomorrow, basically. But from a higher time frame perspective, I want to label this for our FVG low as a potential resistance point. Let's put that to the right. For our fair value gap high. Bring it back down to our 5-minute time frame. We broke through that old high right here with the news. It's not here. Where is it gone? There we go. So this is our 4-hour bearish fair value gap. Yesterday we had a beautiful market maker sell model during the entire New York AM and PM session. And then I saw the rounded bottom, Asia, London. I know, of course, I could have kept on holding on to the trade. But we all know it's not always that simple. Would have, could have, should have. Right, here we had a bullish fair value gap overlapping with last week's new week opening gap. And we kept holding support on that to continue the bullish momentum back to the upside. We have our buy side target right here, this short-term high. That's coming in or lining up with the 4-hour fair value gap low. That's 5 points away. So for me, no engagement just yet. I'm going to wait for the 9:30 open, but I'm going to keep an eye on it. Get in tune with what price is up to. Answer some questions, and take it from there. All right, 4-hour fair value gap. We close above this 1 hour. Actually, let's just put the 4-hour up here, so we don't have to use these lines. Do we also have something on the 1 hour here? Nope, no fair value gap on the 1 hour, only on the 4 hour. Let's take a look at the daily chart as well. So yesterday we had a down closing candle. Now we're starting to retrace again. Tedious, playing inside the range. If we take a look at that, what NQ is looking like on the daily time frame, we can see that NQ actually went below last week, 2 weeks ago, November the 16th, first day slow. NES did not do that. So right here we have that big bad SMT divergence at the lows. Hope that's clear. Yesterday we formed a lower low. Comparing it to this day, we also formed overall we have this SMT divergence here. If we look at the daily, so just trying to form a daily bias, looking at the 4-hour time frame on NQ, This is what we're working with. Inside the 4-hour bearish fair value gap already on NQ and on ES. Yeah, we're moving into that area. Let's see. We have that SMT divergence. We already lined that out. Taking it one step at a time. Potential for a left shoulder head, right shoulder setup here on ES. So in this reasoning, we would believe that we're gonna take out sell side. This doesn't have to happen today. Could also happen tomorrow, and today we're just gonna reject a little, and then tomorrow during NFP we blast through all that. Or we're gonna continue to rally after this 2-week long consolidation here. Let me get rid of that. So 4-hour time frame, 4-hour bearish value gap. Let's drop it down to the hourly and compare the hourly time frames. Maybe something is really obvious here. Previous week slow, we've been below that on NQ already on Monday, Tuesday, and right here. From lower lows with that SMT divergence. Monday slow. We even have intra-week SMT divergence. Monday slow right here on ES compared to today's low. Monday slow compared to today's low, forming a higher low. Right now, in terms of the high of the week, is still the opening candle right here on Monday or Sunday, basically. And that's really rare. We don't see that happen a lot of times. Usually, Wednesday or Thursday is going to form the low or high of the week. During expansion weeks, we see Friday's closing price or Friday's low being the opposite. So if we see a high of the week on Wednesday, Thursday during an expansion week, or Tuesday, Wednesday, Thursday, so around midweek, usually during an expansion week, we see Friday's close or Friday's low turning out to be the low of the week. So just following that. Right now, the high of the week is still Sunday's opening price right here to the tick. Low of the week could have seen the low of the week this morning during London. That's the question that we try to answer doing our higher time frame analysis right now. Let me actually hide the power of 3 here. What are your thoughts? Feel free to share them with me. I think we've seen low of the week this morning. Do you think we can continue? We're gonna continue lower. What's your daily bias? See if we find some agreement. Also, everyone who's watching on YouTube. 46 minutes left for this 4-hour candle. We keep on pushing. The hourly closed above last week's new week opening gap. 15-minute. Just keep on expanding further to the upside. So the next 15-minute target would be right here. And another target would be right here. And another short-term high would be right here. Then we would enter a 15-minute inefficiency. And we would come close to yesterday's high, actually, where we rejected at 9:30. First bearish value gap, entry short. And on lower time frame, we actually saw that play out a little bit better. Market structure shift, bearish value gap, breaker block, We come into that and continue lower into the low of the day, leave behind another bearish fair value gap, reject of our lowest down closing candle once more. You can see that has been respected very well. Continue lower, leave behind another bearish fair value gap. And yeah, so oftentimes I get the question, yeah, well, but how can we tell that this bearish fair value gap is going to hold? And if you're trying to find a answer to that, that works 100% of the time. You're going to be on an endless search for that answer. These simple answers you just don't know. But with good risk management and a decent entry, even if it's at the low of the fair value gap, say we enter right here, our stop loss goes above this high, we don't over leverage or anything, we target the previous day's low right here for a 2-to-1 risk to reward. Well, there was not a single confirmation yesterday that we do not want to, that would tell us or indicate to us that we are going to reverse. No indication at all. The first indication would have been, okay, we're disrespecting bearish fair value gaps, but we haven't been doing that at all yesterday. That's how we can, well, not know that we're going to get a beautiful market maker sell model to the downside, but that's what we would anticipate in the best case scenario. Of course, not every day we're going to see that best case scenario, but with good risk management, we could play it like that. Another bearish fair value gap. We could place our limit order and place our stop loss above the high. If we're wrong, we lose 0.5 to 1% depending on how much you risk. And if we close above the bearish fair value gap, which we didn't, we can remain in this trade without any issues. No information or no indication at all that we want to revert during the PM session. Continued lower instead. But of course, that's not the case every single time. All right, another bullish volume imbalance right here into our 4-hour bearish fair value gap. Right up here. We have 15 and 5-minute short-term highs. What's a short-term high? It's simple. It's a high with a lower high to the left and a lower high to the right. Right here, lower high, short-term high. Lower high, short-term high. Lower high, short-term high. So from the candle we moved 9.5 points. So let's actually measure that last manipulation move, which is going to be a little bit more tricky on ES than it would be on NQ, because on NQ, we've been looking at it this morning as well inside the VIP chat. We saw our 2022 model, the same one that I was trading on ES. But yeah, the difference is that ES, after forming the 2022 model right here, taking out the Asia session low, got up into here, but it formed a new lower low right here one more time. What happened on NQ? Follow my cursor on the left side of the screen. We take out that low, we get our displacement, we have our bullish fair value gap paired with our breaker block right here. We keep holding support at this level and we move away from it. We got the retracement also on NQ, but NQ didn't go back below this low here, leaving us with bullish SMT divergence at the lows. Then we aggressively move away from that, leave behind a inefficiency on ES. This was the opportunity to enter. Of course, now in hindsight, it's easy to say that we could have kept on holding on to this. I was happy just getting out at this old buy side for 5 points. And that's exactly what I did. Because who's there to say that, yeah, we couldn't just go back? And I'm not going into the trade expecting this every time. I might now with the CFD account because I have more room to breathe and not a live trailing drawdown like I usually have with Apex Trader funding. So that's a little bit of more comfort. But we get the idea. So following ES and looking for that last manipulation, well, let's do it from here. Lower high, lower low, higher high. Well. From a market structure perspective, I used this as a market structure shift earlier this morning. Paired with the midnight level. And before that, I used this as a market structure shift, bearish, where we got in on the fair value gap, but we didn't hit our 5-point target and got stopped out at break even. And before that, I used this as a market structure shift. But with good risk management, this didn't lead to me to lose 2 trades before I hit the winner. I break even on those 2 trades, still allowing me to get in on the 3rd potential setup without any issues at all. So market structure shift, then I would count this as our last manipulation move to the downside. Let's see and look for some standard deviations. It's from my Bitcoin analysis yesterday, -10. Let's do -5. That would deliver us into our 4-hour inefficiency and our 15-minute, 5-minute short-term highs. Exactly that area, just measured from that last manipulation move to the downside. Because that last manipulation move could also be translated into our order block or breaker block. Here on the 5-minute time frame, a little bit harder to see, but we would be looking at our highest up closing candle, lower low, lower high, lower low. This would become our breaker block, aligning with our bullish fair value gap here. It's pretty big, but yeah, we got our entry, and from here on, we left the low. But in my opinion, it was also, the possibility was there that with NFP tomorrow, that we're just gonna keep on chopping. We take the lows, we take the highs, we take the lows, we take the highs, we take the lows, and then maybe during New York, we stopped doing that. That's why I didn't end up holding on to the trade. Of course, in hindsight, super simple. I think the best entry opportunity that would have been available would have been a market entry once we see, okay, sweep. That's already maybe worth a couple of micro contracts or micro lots. Okay, we sweep, we didn't close below. We're likely to continue higher, anticipating this low to remain intact, targeting the new week opening gap or the 4-hour inefficiency from this entry right here. The confirmation would have been for me right here. Okay, this wants to continue higher. Let's see. And if I say let's see, I'm meaning use proper risk management. Place your stop loss below this bullish momentum candle, and you already have a plan in mind. If we do not continue immediately, well, you get out of your trade or get stopped out. You can even use a little bit of a bigger stop loss if you want to, but you have a clear plan in mind. That would be price to continue higher into higher targets. If it doesn't do that, you get out. All right, so we've already hit our first buy side pool. It's 9:20, so we have 6 more minutes until the New York Open. Short-term high, short-term high. Short-term high. and short-term high. And then of course another short-term high right up here. So we have all the buy side liquidity marked out. Our 4-hour bearish value gap. It's our highest 4-hour bearish value gap before we reach the previous day's high right here. Pretty bullish. Up, down, up, not the easiest price action to play, but possible. 9:25, so that's that last minute. We closed inside our 4-hour bearish value gap. So for the New York session, I have two things in my mind. Should a swing to the downside, continuation back up, or immediate pump to the upside, and then we see the retracement. One of both. It's usually one of those two things for the New York Open. Let's check out this guy. I've noticed this week S and Q haven't had too much correlation. Yep, same for me. NQ will pump and ES won't move, and vice versa. That is a good way to tell which is in control for a true draw on liquidity. Yeah, but even that, a true draw on liquidity would have been rather tough. I mean, if you would be targeting the previous week's low, well, yesterday it would have worked fine. But yesterday, New York session, we saw the move in tandem. This morning, London session, ES, yeah, just consolidated and is now starting to expand. While NQ, yeah, has already left the chat basically. Ended that right here at 3:30. So trading NQ this morning would have been better. But I prefer just to trade a single asset. Makes it all much easier. See if you have anything on YouTube. Nope. So I'm curious for everyone that's watching, what prop firm, if you're trading with a prop firm, of course, if you don't trade with a prop firm, disregard that question, are you trading with? Do you trade with a CFD prop firm, like for example Funding Pips, where you have a static drawdown and a two-phase challenge? Or do you trade with a futures funding firm and execute on NinjaTrader or even directly on TradingView? Or even Take Profit Trader? What are you trading with? What's more popular? I think CFD challenges are more popular. Not everyone knows about future challenges or future prop firms. I tried both. But for a beginner who struggles to pass a challenge, especially a futures challenge, I'd say it might be worth a try to look into a CFD challenge because of the reasons. Yeah, Apex. Yeah, I'm also with Apex and Take Profit Trader. Unfortunately, on Tuesday, I blew my 50k Apex account that I used for the live stream. It really set me back a little. I was not far away from getting my next payout, but then I had my micro chart and mini chart like this in a split screen view next to each other, and I entered with 8 minis instead of 8 micros. Price moved very quickly during the New York session. That already put me in a initially $250 in profit. I didn't stop it, of course, and then it snapped back and boom, I have 250 in unrealized profit, and then it moved away super quickly down $1,500, something around that. And now it's 15 seconds before the open, and this way I lost like 3/4 of my live trading drawdown, which sucked, to be honest. I didn't like that at all. And I didn't stop, and yeah, blew the other $500 that I have left. And that's, I think, I mean, if you never had the issue or never even got close to that similar issue with your futures challenge, eventually you're going to stumble upon it. Because if you are 5% in profit and you lose these 5%, your challenge is gone, or your funded account is gone. Whereas a CFD challenge, if you are 5% in profit, you can basically afford to lose 15% before your funded account is gone. Which, psychologically speaking, puts less pressure on you. You have more room for mistakes. And that's why I think they're easier to pass. Alright, so we took out that next buy side target. We hit the bullish fair value gap right here, we see that. To the tick, we filled that in. But we don't enter on a bullish fair value gap right at the high of the day. Doesn't make sense. Where you're going to place your stop loss in that scenario. Just watch it and appreciate that price is delivering so smoothly, waiting for it to change. Change always offers opportunity. I'm ready to execute on my CFD challenge. Let's see, we got a new message. And what I also think is, well, rather against you getting paid from your prop firm with Apex. That's why I also have my take profit trader accounts, is that you need 10 minimum trading days between withdrawals. You can pay them out twice per month, and you have a 30% consistency rule. That's what I really don't like about Apex, especially if you're funded, that 30% consistency rule. Yes, it's not the end of the world, and some people say, yeah, consistency is good, don't worry about it. But, well, here we as traders, we have the freedom to choose. And if you can choose between no consistency rule and no minimum trading days between withdrawals, of course you can bypass that with micro executions for 9 days, but you would have to worry about your consistency rule. You can't have one big winning day, and the other 9 days for your next payout only consists of $5 wins and $5 losses, because you are playing around with micros. And that's, yeah, tricky, I'd say. At least trickier comparing it to take profit trader or a CFD challenge or CFD funded account. Because all you need there is 1% in profit. That's the minimum payout threshold for funding pips. So you're on your funded account, you make 1% profit, and yeah, you can request a payout, and yeah, nothing of there's no trailing drawdown. Your drawdown is fixed forever at 10% of your initial capital. But that's just my opinion comparing both futures and CFD challenges, because I can imagine that a lot of people struggle passing them, and I don't have to imagine it. I mean, the stats are out there. Struggle passing it, or maybe if you don't struggle passing it, actually getting your payouts. And from that perspective, if you don't struggle with it, don't listen to what I say, just pick whatever you like the most and run with it. But if you do, and you have these issues with, not really spread issues, but issues with the trailing drawdown, then the best solution for you would be to try out a CFD challenge. Even though you have the downside of spread, blah, 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 but you have more room to breathe. Because I can tell you from experiences, it's one of the most frustrating things to encounter, being $100 away from your profit target, and then you just lose it, or you lose $1,000 off that, and now you only have $1,500 of room to breathe because you have that 5% trailing drawdown. And now you start thinking, oh, if I lose the next 4 or 5 trades or make a mistake, then I only have 2 more trades to take, and that puts unnecessary pressure on you, if you know what I mean, especially for the beginner trader who wants to get his first challenge passed and then trade on a funded account. And that's the worst thing. And by comparing CFD with futures, looking at the drawdown with a futures challenge, risking $250 per trade, so basically 0.5%. On a futures challenge, we would have a max losing streak of 10 trades. And comparing that to a CFD challenge, risking the same amount, we would have twice the amount. And then the major difference that most people don't really care about is that with the futures challenge, it's trailing. So at any point in time, you can afford to lose 10 trades in a row with solid risk management. Whereas with the CFD challenge, your drawdown is locked in at 10%. So for an example, I'm at 50K right now. I'm at 50K. My max drawdown is down here at 49. Let's say I'm up 5% and my target is 8%. If I lose these 5% here and go back to my break-even level, my futures funded account or future trading challenge would be done. But on my CFD challenge, I will just start again without having to pay anything, without having to go through a challenge again, because for me to fail it, I only fail it if I hit my 10% max drawdown level, which would be down here at 45K. Let's say, I don't know, nice to have. Especially if you have the options. If we wouldn't have the option to choose, well, then we wouldn't even have this discussion. But since we have the freedom, it's worth mentioning it. We're still inside the 4-hour fair value gap. Let's take a look at what NQ is doing. NQ also retraced a little, but pushed back to the upside. We keep an eye on NQ. We already hit all our short-term highs inside our volume point of control from yesterday and inside our 4-hour bearish fair value gap. The next targets to the upside would be those 2 short-term highs. We'll see how that goes. Yeah, Agent Smith, if you spent the time, I did lots of research on all these prop firms to make these videos. Yeah, Trade Day has a 30% consistency rule during the challenge and also when funded. Apex only has that 30% consistency rule once you're funded, once you're in stage 2. That's the difference. You wouldn't know that if you do not do the research and jump down into their FAQs and specifically look for it. If you don't look for it, you won't find it. You will think, okay, there is no consistency rule here. Where do they say that? no total cap on maximum payout, but what they don't say is that yeah, you can make $10,000 in one trade, but in order to get it paid out, it's basically worth nothing. So in order to get paid out of your $10,000 trade that you made, 30%, $10,000 has to be 30% of, basically you have to reach a $30,000 profit target then, or 90,000? I don't know, doesn't matter. We get the idea. To avoid you just getting funded, take a YOLO trade and get paid out. You have the ability to do that with, for example, Take Profit Trader if you want to, or ICFD challenge, but not with Apex, with the consistency rule once you're funded. It's a game we play. We could just be trading our own capital and we wouldn't have that opportunity of getting much more capital without the risk. If we would put $100,000 in our own accounts, yeah, well, if we lose 10 grand, we actually lost 10 grand. If we trade a prop firm account, we lose, depending on which company you sign up with, $200, $300, $400. And this is also some type of leverage. And then the question is, the question you should be asking yourself, all right, I'm playing the game of the company. The company, the prop firm, has one interest. Of course, it also, for marketing purposes, wants to pay out some traders, because imagining there would be 10 prop firms out there, but no funded traders ever receiving a payout from them. As a solid business, you also need your top of the line traders. You pay them out frequently and you can do interviews with them and all that stuff. Otherwise, who would want to chase the dream of being funded with your prop firm? Think about it in that way. And then the question really is, okay, which one has the best rules? Which company do I want to sign up with and play their game? It's their game. They certainly do not want to give payouts for everyone, especially free payouts. Otherwise, they would run out of business. That's why I said weeks ago Apex had the 20% rule. Not 20%, 30%. But only once you're funded. To avoid you having a big win and then hedging that using micros for the other 9 minimum trading days to get your first payout. Well, sometimes I don't think there's anything wrong with getting lucky on a trade, and it just runs and runs and runs and you make big profits. Imagine trading that on your own personal account. I mean, you deserve it. You took the risk and it played out well. So now the question is, do you want to be a funded trader with a prop firm that doesn't allow that? That doesn't allow you to get lucky ones. Of course, it's also in their interest. Paying out traders that get lucky ones would mean a lot less profit for your company. So in order to avoid that, what do you do? A consistency rule. And you can market that consistency rule by claiming, all right, yeah, we only want consistent traders, and consistency is one of the core values at my prop firm. So consistency, top priority. That's why we have a 30% consistency rule for our funded traders, really to force them to be consistent. While in reality, all I say is, yeah, we don't want traders to get lucky ones and pay them. We want to avoid that, and that's why we have the rule in place. I'm not saying to think of your prop firm as your enemy, but also not as your best friend. You're playing a game of chess. And every different game, every different firm has a different set of rules. And you like to pick the one that has the easiest rules. And because we have a big variety of different firms, yeah, we have the freedom to choose between different firms and pick the one whichever we like the best. And that shouldn't be based on any influencer affiliated with a specific prop firm. Just because your favorite YouTuber or Twitter influencer is now all of a sudden affiliated with prop firm A, doesn't mean you have to sign up with that one. The only reason your favorite influencer is doing that is because he gets money for it. Let's see. We're not really going anywhere yet. We'll take a look at NASDAQ. NASDAQ is also starting to retrace. Not like we can call this a market structure shift if we go below the Swick low, but we could be looking for a short-term retracement coming off our 4-hour bearish fair value gap. So I might be interested getting might engage on that. So I get my phone ready for my MT5. What's the time? It's 9:45, so that's a new 15-minute candle. Hit a 15-minute bearish fair value gap inside the 4-hour bearish fair value gap. I'm first of all gonna wait for this candle to close. Has the potential to shift structure. Same like right here. Only difference is that we're now a little bit overextended if we measure from the low to the high of the day. Could at least anticipate a retracement back to the 50% level. (15-minute time frame). We have a 15-minute bullish here, 15-minute bullish here, a potential 1-hour bullish right here, and we're starting to reject. Take a look at NASDAQ. NASDAQ is looking similar. 5-minute time frame. Let's go back to that and actually turn on our dear VWAP. One and a half minutes to go. Mark out this bullish 5-minute. And see if we shift here. I mean, we can look at the 1-minute time frame to see what we're working with. Not really a market structure shift. We have equal high buy side. Let's just chop. Let's turn on the regular trading hours opening gap and see what that's looking like. From here all the way to the downside. So I'm a fan of that. But I'm gonna wait for this 5-minute candle to close. Mm. 15 seconds to go. Here on my MT5, we have that same thing. Zoom in here a little bit. Now we have a inversion fair value gap here. I'm already in the short with one mini contract here, just here on my MT5. Right here, caught that little wick retracement. Let's move my stop loss above this high for now. My safety stop loss. Come on. Stop loss. Doesn't want to move my stop loss. Let's do it on my phone. Stop loss at 250 bucks. Take profit target. Also at 250, 0.5% for that first trade. And now I can open up my risk management tool. Like that, this could easily be a retracement. We're just gonna follow it along. But from what I'm seeing right here is that from our 830 move to the upside, traders are long. They try to chase it long at the open. We see that right here because the volume point of control is not somewhere in the middle. Basically, barely any volume at all around these areas. So that's a perfect volume inefficiency that likes usually to be filled. And that's what I'm anticipating here. It doesn't have to happen. That's why I'm managing my risk, that in case it doesn't happen, I don't go bankrupt. Because like we said, this could end up being a 15-minute time frame retracement. We could be hitting one of the fast-moving EMAs and immediately go back up. That's why we have a safety stop loss in place. And it looks like it doesn't want to give us that opportunity. 1 minute time frame. We see bullish momentum. We don't have a bearish fair value gap. We only have equal high buy side. $15-minute closed. No, didn't close just yet. Five-minute time frame. Let's wait for that candle to close in 2 minutes. It's going to give us the information we need. Get rid of that risk management tool. And see where we're going to close. Ideally not above this inversion fair value gap. I know it's super small, but it would be nice to see to actually respect this area. Can follow it along on the 1 minute time frame. Now we hit that inversion fair value gap. 1 more minute to go. $30 seconds to go. Let's see what the 1 minute time frame is telling us. We have a 1 minute bullish here. Let's see if this candle wants to close below our 5 minute. Where do we close on the 5? Right inside our inversion fair value gap. That's nice to see. We're respecting old bullish inefficiencies that we used as support right here at 930. Now we're below that and we're holding resistance. So next area of interest would be this bullish fair value gap if we can close below this to target these inefficiencies. Yeah, looked a little bit scary. But, well, what can I say? If trading would be simple, likely many of you wouldn't be watching a live stream at all. So let's see, right here, there's not many inefficiencies. We did measure the 50% of the entire daily range, which is coming in right here at 64. Let's take a look at NQ. NQ already hit the VWAP. Go to the 1 minute time frame. We closed below our bullish fair value gap. But we're still bouncing off this 5 minute one right here. Yeah, let's just take it one step at a time. We're going to be wrong at least 50% of the time, or 40% of the time, depending on your win rate. And the single trade that you take right now doesn't matter. It's the consecutive amount of trades that you take that matter. All you have to make sure is that you don't blow up on a single idea or trade that you anticipate to play out. If it doesn't play out, yeah, so be it. Wasn't meant to be. It doesn't mean you're gonna lose the next 20 trades. But sometimes I know what it feels like. We feel that if we fail this trade, it's the end of the world sometimes. But in reality, it isn't. So we have to make sure we stay calm and collected. Even if we lose, it's not the easiest thing in the world to accept a losing trade, but it's something we have to learn to live with if you want to become a full-time trader. The best trader in the world doesn't have a 100% win rate. That's for sure. But once we see a couple of losing trades, we're ready to switch systems. Like, fuck this, that's not working. Try something else. Oh, I've seen this YouTuber with a 80% win rate strategy. Let's buy his mentorship. That's usually how it goes. Then it has a bad week, and you're like, no, that didn't work out the way I wanted it to work out. I've seen this guy has a new signal group. Let's try out these signals. And I'm only saying that because that used to be me. Take a next look at Nasdaq. Nasdaq with a bearish fair value gap here. 5 minute time frame, 50 seconds for the candle to close. Let's see where it's going to close. Ideally, once again, not above the inversion fair value gap. I'd like to see this area being respected. Otherwise, we could consider taking 50% risk of our trade. After seeing it close below, I want these areas to respect it. "20 seconds to go. 15-minute time frame is also closing in 15 seconds. Our volume point of control is still up here. Just looking at this 830 expansion to the upside. Nice. All right, so we even close below the consequent encouragement of this 5-minute bullish, but we open up with a 5 and 15-minute volume imbalance right here. That's actually also a hourly volume imbalance. We see that? It's the new 10 a.m. candle. So this is a new hourly candle. Let's see what it wants to do. So far, so good. We don't hang on to a single trade with our dear life because we just don't want to lose. Let's take a look at NQ. Tap the fair value gap. But with this new hourly candle, we could see it continue to the upside. It's a possibility. We're protected against that. We hit a 15-minute bullish, the highest 15-minute bullish on the 1 hour time frame. We rejected here. There's no inefficiency other than up here at 4583. Could be a potential target for the 1 hour. But it's not like we're gonna blow up if we are wrong. It's the most important thing. So far we didn't see a reason to get out of the trade yet. So we simply stick with it. Not trying to get involved in the emotional roller coaster that trading sometimes can be. Let's go, Agent Smith. $1.5K from passing the Vegas account. Mm. 3 minutes here. Let's check out what the 1 minute time frame is looking like. Just consolidating here. I'm going to take this challenge also with market executions, but with good market executions, ideally. Best case scenario. Of course, it's not going to be the case 100% of the time, but all I need to achieve is a healthy 50% win rate. And in reality, we all could do that. The question is if we can handle losing 50% of the time. Easier said than done. Maybe you have caught yourself before explaining day trading to a friend and you're like, oh yeah, all you need is a 50% win rate with a 2-to-1 risk reward ratio, and you're easy because yeah, you lose 50 of your trades, but you're also going to win 50 of your trades. Overall, your net profit is still going to be profit because you have that 2-to-1 risk reward. You always make twice as much as you're risking. Then you're really excited about it because it makes sense, blah, blah, blah. It's like your little slot machine with, yeah, the probabilities in your favor. And then you get back to the screen. You lose a couple of trades in a row. And you're losing it again. Not talking to anyone in specific, just my experience. 24 seconds to go. of that first 5-minute candle on the new hour. Let's see where we close. If we get the close above, I'm gonna take 50% off. We didn't close above, no reason for me to get out. So first roadblock is going to be this bullish fair value gap here on a 5-minute time frame. Second one is going to be this overlapping area of our previous week's new week opening gap. But right now there's, well, other than the accumulation right here that going sideways, well, worst case, my stop loss is going to be hit. I lose 0.5%. I have to keep on reminding us. In terms of a 2022 setup, it's not really existing here on the 5-minute time frame. We don't have the bearish fair value gap with it. We do not have a proper breaker block. We cleared a higher time frame point of interest. Yeah, we're inside a 4-hour bearish fair value gap. We cleared short-term highs. Doesn't mean that we have to get the retracement into these inefficiencies right now at all. 1-minute time frame. We cleared the short-term high another time. And we reject. What a roller coaster ride it has been. Hit the volume point of control again. Let's see if we can overtake that and close above the 50% of our 4-hour fair value gap. 15-minute. And we're at this level right now. Higher highs and higher lows. Equal high could still be the target. I think I'm almost out of my trade. Almost. Let's wait for this 5-minute candle to close, like always. Or our stop loss to be hit. Wouldn't be the first time where we go up into this area and then reject and still close below it. Could be looking for anything on the 1-minute time frame, but we don't have any inefficiencies here. No fair value gaps at all, other than this one right here. Not a single one. And now many people likely already closed their shorts or have been stopped out. And now they're jumping back in. Then it goes back up again. And they close it because now they think it's going to go up. Then it's smacking back down. And they go short again. Then it's smacking back up. But we keep on respecting this inversion. No reason for me to exit just yet. Not even think about a 50% exit. Taking off some risk. With our 4-hour bearish high value gap again, with a nice pin bar rejection. And now we go lower. Let's check for SMT divergence. And in Q we didn't get near our old high, but we keep on consolidating. Now we're back down. This is getting tedious. We took out these equal lows right here. Left behind another set of equal lows. And now we go back up. Bullish volume imbalance. Still no fair value gap that we could use to frame anything. Since 9:30. 9:30 opened up right here. 15-minute. Now looking bullish again. 1-minute time frame. Swept some lows. Trap traders short. And like we said, looking like it's going to go short. Put them into margin trouble again. Taking it lower again. But now this could be the time where we continue higher after taking out stops right here. Let's take a look at NQ. If NQ is doing something similar. Yep, NQ is also pushing. Did we clear our equal highs? No, not yet. Now we cleared the equal highs. Let's see if we actually break out or if we just fake out one more time. Potentially leave behind SMT divergence. We want to keep an eye on NQ. If it's also going back above the high or if that's only an ES thing. We have buy side above. NQ is pushing. ES with a bullish volume imbalance. Now leaving behind bullish fair value gaps. That might be a good sign. But right now it looks more like we have SMT divergence. But nothing fixed yet. Let's check out the 5-minute time frame. That's about to close in 1.5 minutes. Let's keep an eye on that. If we're gonna get a close above this high, I'd say this buy side is gonna be imminent. Close above the 4-hour bearish fair value gap, consequent encouragement. Then it's more a matter of time for NQ to also push back above buy side. It's no terminal SMT divergence yet. All NQ has to do is go higher. 30 seconds before the 5-minute candle is going to close. 20 seconds. Eight, 7, 6, 5, 4, 3, 2, 1. And another bullish volume imbalance right here on the 5-minute time frame, also on the 15. Next buy side targets are going to be imminent. Not going to take us very long to reach these. And yeah, I was wrong about the short. Is it the end of the world? No, it isn't. It's part of trading being wrong. There's a good book called The Best Loser Wins. Alright, buy side liquidity right here, and then based on this retracement here at the open, if we measure that out, if we want to continue to the upside today, 2 standard deviations would deliver us into the previous day's high, just to put it into perspective. If we move now to the upside, twice as much as we move to the downside here after the open, we hit the previous day's high. We can go to the 1-minute time frame and see if can follow bullish order flow, and Q is also about to take out the high. We hit our first buy side targets. We still have potential SMT divergence, so we keep an eye on that. Right here, we have an unfilled volume imbalance. That's lining up nicely with the high of our 4-hour bearish. Not confirmed yet on the 4-hour time frame that we're going to close above it. That's just on a lower time frame, but usually we like to come back for these. Could measure our last manipulation move. Higher high, lower low. 3 standard deviations towards the previous day's high. Keep on forming new volume imbalances. We're just going to follow price here and see if we respect bullish order flow or not. Five-minute time frame. Potential for a 5-minute bullish fair value gap to be left behind. We still have potential SMT divergence right here between S and NQ, but that's not reason enough to go short right away. Let's see if we respect bullish order flow, that highest bullish fair value gap. I could see us retrace into this unfilled volume imbalance because we always do. We have now equal highs right here. Could hold potential support on the old high, or not do that and just hold support on our highest bullish fair value gap. And if we see price cutting through all these bullish inefficiencies that we just left behind, with valid SMT divergence, we can be pretty sure that this has been a last manipulation move to the upside. And yeah, now it's time to dump. But I'd like to see that confirmation first, because there's no point in premature SMT divergence counter trend trades. You'd like to combine confluences. Market structure shift with SMT divergence, good. Higher time frame point of interest, very good. Yeah, even ICT is losing trades. We're holding support on this bullish fair value gap, bullish order flow. The same way as an EMA trader would use a EMA and buy bounces of the EMA support. So now we hit that buy side and took out the high. NQ still didn't take out buy side. We're still waiting for that. Let's zoom in here so everyone can see it properly on live stream. We tapped the VWAP, not just a random level, the VWAP, volume weighted average price. Institutions are using that. You can't change my mind about it. That's why I have it on my chart too. It's like a little nice baseline that we can use. I'm not buying a bounce of the VWAP as a fixed long signal. Every time we go to the VWAP, I'm buying. I use it as a confluence to build my narrative. If I see a breaker block, midnight level, whatsoever at the VWAP, yeah, sure as hell I'm going to take the trade there. And it's just an additional confluence. If I don't see that, then it's just the VWAP and we're returning to our baseline before we see the next move. And we tend to see these consolidations happening around these levels. All right, NQ about to break. And there goes the SMT divergence. That's why we don't take any premature SMT divergence trades. Next target for NQ, we spoke about it at the beginning of the stream. It's very rare that we see the high of the week being formed on ES at least on a Monday. So yeah, target previous day's high. For NQ, potential target, new week opening gap, and Wednesday's high, which is currently the high of the week. But we're likely gonna leave that behind. All right, we can we still take a look at NQ, keep up with it and see if it hits our target before ES hits the previous day's high. We keep on leaving volume imbalances behind. I'm still in my long trade with 1.5 mini contracts. Right here from the breakout. Not knowing with 100% certainty that we're going to break out. I'm not claiming that at all. But with my risk management, I have room for that. That's a cool thing. All right, let's see. Let's see. We have a bullish fair value gap with a unfilled inefficiency right here. The 15-minute is also still expanding. We don't have a 15-minute bearish fair value gap until we reach this target right here. Go back to the 1-minute time frame and see if we keep on respecting bullish inefficiencies after making a new higher high. We have a couple of them now. Right here, right here. And give it room. We don't want to be too skeptical. That would cost us more often than not as traders. Let's wait for this 5-minute candle close and see if NQ can close above our old high. Sorry guys, that's my water bottle. Looks like NQ can close above the high. Let's see if we have anything on YouTube. OTE entry. OTE of what? No, it doesn't look like an OTE entry. Nowhere. That would be a 72% retracement. We didn't see that today. Or maybe you mean for the OTE short. I go short once I see the narrative build on the lower time frame here. I have my areas to where I would look for the short. Right here, 15-minute bearish, previous days high above. We've been bullish, we consolidated for a while. We can measure this consolidation out to look for potential targets. We didn't hit the first deviation yet. I don't like placing a limit order at the OTE level from yesterday. If today we could have the most bullish day of the entire week, of the entire month, and then I'm just blindly placing a limit order there. I like to know where the OTE level would be and then look for on a lower time frame for a potential market structure shift lining up with that. That would be my approach. All right, we have plenty of fair value gaps below to fill. The 15-minute candle is going to close soon as well. Like I said, we don't have a fair value gap or anything at all. I think we have the potential to leave this behind and take out the previous day's high. Of course, we don't have to. We never have to. So now we can pretty much follow it again on the 5-minute time frame. We have our targets measured out. We know what we're looking for. I think previous day's high could be a realistic target. We have our 5-minute inefficiencies that tell us if bullish momentum continues or not. We kept holding this bullish value gap here perfectly. We were waiting for it to break. We never see that. Then we got the invalidation, so we get out of our trade with a loss. We don't have to immediately go in long. It doesn't have to happen, and we could just end up chopping. Like, that's always a possibility. 2 bits of seek and destroy before we get a PM session expansion. Who knows? Just managing the risk well. Don't have control over the trades anyway. Well, at least the outcome of the trade, we only have control about how we manage the risk. Let's take a look at our higher time frames. 1 hour, we're inside a 1 hour bearish. That's interesting. So let me bring that up to here. One hour bearish fair value gap. Then we have the 15 and we have our previous day's high right here, but yeah. We take it one step at a time. So right now we see we're inside that 1 hour. Let's see if we get our first 5-minute time frame close above that. We'll take a quick look at NQ. NQ bounced off the old high. Even not against putting a few EMAs on here and see what that's looking like. Hide the ICT all in one and our fair value gap drawings. Pretty extended away, very far extended from the EMAs, but we got a rough bounce off the 25 EMA here. Same here, the 200 and all these EMAs, they just crossed over. Not saying that I'm an EMA trader, but I'm also not saying that EMAs don't work if you manage to risk well. being an EMA trader can be enough to be profitable. You would just have to be a very damn good risk manager in order to make it work. If you look at the 1 minute 1 minute time frame, well, are we in a trend? Yes. Trend is your friend. We buy pullbacks at 8:30 news event. Did we see a close below? We can't stay in the trade. 9:30. All right. We bounce off the 100 EMA. Consolidate in here. Good opportunity to buy if we're the trend trader type. If we should close below, yeah, then we just have to make sure we do not blow up in case we hit that 200. Because being wrong on a trade happens more times than not, depending on your win rate. But being wrong and blowing your account based on that, I'm not sure how many people are doing that anyway. But I wish I would have heard some of these things when I started. Not started, even midway in my journey. Like, oh yeah, this trade has to work. US dollar index. NQ made new highs. I think NQ can keep on running. I think. Doesn't have to be. Check out our 1 minute time frame. We ended up holding our inefficiencies right here, not leaving behind new ones. So let's see if we can continue higher into our next buy side target. Keep on forming higher highs and higher lows. That's where I'm always a little bit cautious. It's our first push, second push, third push. We wouldn't like to see a market structure shift here. This could end up being a retracement. Could still end up continuing higher. So a short-term pullback on the 1 minute time frame with a 3 drives pattern. The psychology behind a 3 drives pattern is that, yeah, most traders jump in on that third drive, because then that's really when that FOMO kicks in. And market makers know that and they capitalize on it. And of course, it's not always a 3 push. Sometimes it's just a 2 push. If they trapped enough traders long, sometimes it's a 5 or 6 push. But the idea behind it is what we have to understand. Two minutes to go on the 5 minute time frame. Let's take a look at NQ. NQ is starting to reject here. While this ES is still looking higher. Let's see if we have any questions on Discord. Yeah, I've seen that. I'm not using the DXY. I try to keep it as simple as I can. I'm a big believer that one chart in your watch list is more than enough. At least for the beginning. You can always scale up your entire trading operation or your trading business in the future. No one's holding you back from doing that. The question is if you want to do that once you master one. Because if you mastered one, where's the point in even looking at 2 or 3? $15-minute time frame, new candle, 1 minute time frame. Going sideways here now. Mm, 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 mm. Guys, feel free to ask me questions so we can keep the stream running and I have stuff to talk about if you want to. If not, then I guess everything is clear. We still didn't close above the 1 hour. But we also didn't invalidate anything on the 5 minute. Agent Smith, when was the last time? I remember we both started with CFD challenges and then we both made the switch over to future funding firms. Are you... Because right now, after blowing that Apex funded account that I used for the live stream, I looked for another opportunity to, show something other than paper trading on the stream. And I'm doing that now with, MT5 and a CFD challenge. Because I wanna, after all that time trading with a trailing drawdown, I wanna see how much of a difference it makes, especially once you're funded. Back in the days when I was trading CFDs, with CFD prop firms, I was trading with my Forex funds. You might have heard of my Forex funds. I've had a couple of funded accounts with them. But unfortunately, they've done some shady business and they shut down and have a few, people complaining about it. I mean, it's not like they never paid out traders. They paid out traders. They paid out millions in dollars to traders. So, and then MFF was gone and I was aware of future funding firms, and that's when I started futures. But I definitely see the upside on both of them. I wrote out pro and cons about it yesterday in the general chat, what I think. And if your issue is getting funded, I'd say from a rational perspective, be easier to get funded with a CFD funding challenge. Okay, let me rephrase that. It's easier to get a payout or to get consistent payouts. Yeah. Agent Smith, you are almost above your safety pillow. And
what do you mean?
Say that again.
Safety pillow of what?
Of your trade day funded account.
What is that? I'm at 2,900 right now. 2,925.
Yeah, with every futures funding firm, you have that safety pillow.
I thought it was 5K.
No, that's not your safety pillow. That's your max profit before you become a live funded. Before you get move over to your live funded, your safety pillow is basically the point where you can withdraw profits without losing anything of your margin or your trailing drawdown. So for the 100K account, that would be $3,000.
Oh.
So let's say
$75.50 away.
yeah. So That's your trailing max drawdown at the end of the day. Let's say tomorrow you make, if you trade NFP, you make $500. You can pay yourself $500 without losing anything of that drawdown. That's your safety pillow. So as long as you stay above 103,000, basically once you reach that level, your drawdown is being locked in at 100k. If you're now up at 110,000 and you lose 7,000 of that, you don't blow your account because your trailing drawdown locks in at 100k once you are above that safety pillow, cushion, whatever you want to call it. You know what I mean?
I understand now.
Yeah. Yeah, and you are 106 or $100 away from getting to that safety pillow. So if you close out today at 103,000 or a little bit above that, your drawdown is locked in at 100k and it doesn't move up from there anymore. And then afterwards you can farm these payouts until they move you over to a live funded account. And I would be doing that, sure as hell. Make $500, get your payout. Let's head back to trading view. 5-minute time frame. I think we might see some SMT divergence here. Do we? 1 minute time frame. 1 minute time frame. We have made a higher high on NQ and lower highs on ES. So yeah, there's SMT divergence. We swept this low right here. For me, the invalidation of the long would come once we get back below our 4-hour fair value gap. Until then, I'm still labeling it as a retracement because the trend right now is clearly bullish. If you are a low time frame scalper on a 1 minute time frame, you can counter trend into these inefficiencies with a market structure shift, bearish fair value gap, take out lows. Like we said, 1 push, 2 push, 3 pushes. After that 3rd push, all we did was go sideways. And now we're starting to pull back. We have slight SMT divergence at the high here on NQ. Mm-mm-mm. 100 views, let's go. Could look for a healthy retracement here and draw our fibs. 50% would be coming in right at our old high. $15 going to close in 1 minute. Then we leave behind a new 15-minute bullish fair value gap. We still have this unfilled 1 minute, 5 minute, 15 minute. Okay, it's not on the 1 hour time frame, but we see where we're rejecting from, obviously. Agent Smith, are you still here?
Yeah, I'm here. I'm sorry. I'm just watching my
Yeah, no, all good, all good. Manage your
gold long.
Gold long.
5
About the question
contract.
that I asked you earlier. Would you be interested in trading CFDs again? like with a CFD.
Yeah, okay. So what is a CFD? What's
The stuff we traded before we traded futures. You wouldn't trade the ES contract, you would be simply trading the SPX 500 or XAU USD and Euro US dollar.
You mean as a cash? There's a prop firm that does that? My Forex funds?
Yeah, something like my Forex funds or FDMO. I'm right now, I signed up with Funding Pips yesterday because I like their rules. I compared
Yeah,
their.
I read your analysis. Great job.
And yeah, the main difference is that you don't have the trailing drawdown, in my opinion. You have a
Yeah,
10% fixed drawdown, so that would be something that's more interesting for your Vegas account, if you know what I mean.
totally, because of that, I've been busted so many times.
Yeah, that trailing drawdown, you're up 2.5K and you're up 4K and your trading drawdown moves up with you. You could lose that entire profit and you still, yeah, have that challenge.
It would be nice if they didn't do it live, like if it was calculated at the end of the day. But
Yeah, but that's only with
because it's
Apex.
live, oh
Apex is the
god.
only one that does it live. But Apex is also the cheapest one. That's why most people prefer Apex
Yeah,
for
I
Vegas
mean,
accounts.
I can pass and I can get to the payout. I've done it before, or at least a couple days before the payout with plenty of profit. But yeah, it's a totally different methodology or thinking.
You just have more room to breathe. That's what I would break it down to. More room to breathe. 10% static versus 5% trading, or sometimes even 4% trailing.
Yeah, when you in your mind, knowing that you don't have to calculate on the fly what your drawdown is really one thing less that your mind has to calculate.
Yeah. Yeah, and even if you, let's say you face a losing streak, and we all know it can happen, we've all been there, and then, yeah, knowing that, okay, I can theoretically lose all my profit. We're never intending to lose all our profit, don't get me wrong on that, but it's an ease on our mind if we have the potential to lose all our profit and still trade on our funded account and come back stronger instead of starting the entire process over again. Let's say you're up 5% on your challenge and your target is 6%. You lose these 5%, your challenge is gone. Whereas with a CFD challenge, you could lose 15% once you're up 5% before you actually lose the challenge. And I don't know. Of course, it's not always.
Futures moves different too.
No,
I
it's
don't
the
know. I
same.
think there's a lot less volume.
It's the same. Right here I have my ES chart open. I mean, if you maybe scalp the 1 minute time frame, yeah, you're gonna notice more differences. But if you trade on the 5 minute to 15 minute and you're not looking for that perfect precision entry, just a good entry area with good risk management and a healthy profit target. No, it's not moving different. It's not like the S&P 500 CFD. It's not moving to the upside while the future index is. They're packed, just not perfectly packed, and you sometimes see a lower low on the futures chart and a higher low on the CFD chart, but NQ and S&P 500 went up the exact same way right here. If we look at that, bullish candle, gap, bullish candle, and then we went sideways for free. Bullish candle with a gap, another gap, and then we went sideways for free. It's the same. That's not an argument. The only difference is that with futures you don't have a spread. So if I want to place my buy limit order right here, it hits my buy limit order, 90% chance I get filled without price going below my limit order. And with CFDs, yeah, it would have to go below the limit order because you have that bid and ask price in order to get filled. That's, in my eyes, the only difference. I don't know. Every time I think about it, I think about that being the perfect account or the perfect environment for you to thrive in. Because you are a riskier trader. You're not scared to take the risk. You know what I mean? To go in with 1 or sometimes even 2%. But well, if your overall drawdown is moving up with you and it's always kept at 4% or 3%, that would, if you risk a little bit more with your unique trading approach, cost you a challenge more often than not.
Yeah.
And yeah, a static drawdown at 10%. I mean, the difference between, okay, reaching $3,000 on your Apex account, let's say 50K account, you have to reach $3,000. So that's 6%. Or reaching 8%, that's not really a big difference, is it? No, not at all. It's maybe 1 or 2 more trades if we know our stuff, or maybe not even more trades, and we're just good risk managers, and we let our winners ride and pass the challenge with 1 go or 2 trades. But the difference is if we are not right about a certain trade or about a couple of trades, and now we're facing our drawdown limit, because with Apex it's moving up with you live, whereas a CFD challenge, it's locked in at 10%. Let's say you go for a 100K challenge, only if you go below 90K, your account is gone. Doesn't matter what you do above $100,000. You can do whatever you want. You can risk 2%, 3%, 4%, but you wouldn't be able to do that with, well, you would be able to do that with Apex, but if you lose, you immediately blow the account, or you lose your entire margin. That's what I always thought, that it would suit your trading style a lot more than it would. Like, I'm already not as risky with my entries. My risk management is usually below 1% risk per trade. But even I struggle with that, because let's say I lose twice in a row, and now I only have 2% left of my margin. 50% left of it means I can lose 2 more trades. And knowing that, I think it's easier to know that you have more room to breathe. You don't have to worry about a live trading drawdown. That's just winching on a big level, but I mean, that's my opinion. It's okay to winch, since we have the opportunity to choose between, we have choices. It might not be for everyone. And another cool thing, I'm not sure if you know, Agent Smith, is if you pass your challenge, you get a refund of your challenge fee. That's interesting. I like that they offer that. But let's see how it goes. Take a look at ES again. 1 minute time frame. We're just going sideways. We're still respecting that lowest bullish fair value gap here. We have a bearish fair value gap above now, so we're stuck between these 2 PD arrays. No confirmed market structure shift yet in terms of a candle close. Might be getting that now soon. I don't know.
Doesn't it seem like, you're in profit and you're like, you close the trade, and then as soon as you close, like within a matter of seconds, it goes boom in the direction you wanted.
Yeah, usually it does that, because it's engineered that way. It's not random that so many traders have the same experience.
Yeah, I accidentally got in gold long 5 contracts, and I was like, no, 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 and then it
Yeah.
immediately bounced back, right?
Mm-hmm.
And that's what happens when you hit buy on the bid. And then it, went up, and it was 400 in profit, and I put my stop loss just below that,
Yeah.
grabbed it, dropped down, grabbed it, got out with 250, and then boom, immediately spiked right away,
Yeah.
which would have put me in
They
like
know what.
3 times where I was at. It's like
They
getting
know that.
capitalized
Yeah.
on the mistake.
They know what, how, and they know all about our emotions, and they know exactly what to do in order to get us out just before they want to take it off. They know it.
I'm most effective one. I use the proper lot size,
Yeah.
right? 2, I give the trade room to breathe, and if that means I got to drop my lots, I drop my size. 3, I literally don't even look at it,
Yeah.
because it hits, it loses, it loses.
Yeah. Exactly.
I get in trouble when is it gonna go? Because I believe the actual movement of the candle, the flicking of the candle,
Mm-hmm.
it has been psychologically designed to get us in the market or get us out when they
Yeah.
want us out and when they want us in.
Price on the chart is a marketing tool to. Oh, that's looking good. I want to get in here.
And they know all this high quality setups that they
Yeah.
need to design to make the candles look so it gets us in or
Yeah.
gets us
Exactly.
out. Because they don't make money unless we
If we
enter.
don't get in and if we don't get trapped. Exactly.
They have to trick us to enter at the wrong spot, but ultimately they, that beat the market maker video,
Mm-hmm.
but ultimately they have an agenda. They're going to take price to a certain level
Yeah.
by the end of the
Definitely.
day, and if they don't, then they'll continue the goal to the next dude that gets
Yeah.
gets the task handed off to.
Yeah. I agree with that. No questions asked. Sure as hell have an agenda. Otherwise, it can't be a coincidence that thousands of traders, or like if you ask any trader, did it ever happen that you got out of a trade because you were because you feared that it might hit your stop loss just before you closed the trade, and then it hit your take profit target? Come on,
Yes.
it's already a meme that's
Oh,
circulating on Twitter, and okay, I'm in a trade.
oh
Once I close,
yeah.
it hits my take. It can't be a coincidence that.
You know what? If we journaled that, it would be so interesting. Like, took
Yeah.
off trade. I was scared. Hit TP, and like, what would be the percentage? Like I left that GJ trade. Did I share that with you? Yeah,
Yeah.
I left that GJ trade on since December 4th,
Mm-hmm.
and I was just like, look, this is the trade, and I didn't even look at it that often.
Yeah.
I was just like, that's my trade, and 5 days. There's a cash account for it, so of course, I could hold
Mm-hmm.
it. There's no rules there. It's my money,
Yeah.
and I held it, and it not only hit TP, it smashed it. I have a buy on GJ that's on the daily 50% level.
Mm-hmm.
I've been waiting for this buy for 2 weeks,
No. Sort of a swing trading
and
approach.
it's 25% of the way there, but it's not quite there.
Yeah. By being patient, waiting for a price to come to you.
That's a huge skill.
Definitely.
Not jumping in the trade. And I'm telling you, I've lost 80%, 90% of my trades because I jump in. And sure enough, I jump in, it reverses right away.
Yeah.
I'm in major drawdown, and I get out. or I'm stopped out,
Yeah.
whatever, right? Or, I get busted. And then I'm like, it radically reverses, goes to where my original idea was, and then immediately goes into would have been into profit
Mm-hmm.
with zero drawdown. And I'm
Yeah.
like, had I just waited 30 minutes, even 5 minutes, or 10, an hour even, and had I just waited and trusted my analysis, because most traders, they don't want to wait. Like, like for example, it's 8 o'clock. Now I gotta, go to work or clock in, whatever, right? And it's very hard if this isn't your full-time thing,
Yeah.
because you've got time constraints.
It's also because, we live in a society and world where if we want something, we can have it within a like whatever you want. You can A, Google it, B, order it with Amazon Prime and with a 1 day delivery. Yeah, everything's quick. Where should that patience to wait for a trade for a couple of days or a couple of hours come from? Where should it come from? If you want to get some food, click a few apps on your phone or a few taps on your phone, you have food right on your door without ever leaving the house. Don't need patience, not nothing whatsoever.
Yep.
Oh yeah, I want to get that Halloween costume for my dog. Yeah, well, quickly Amazon Prime it and it's there on your doorstep tomorrow. Sometimes even within the same day.
I was thinking about this. When you go through and you apply for an account,
Mm-hmm.
there's a bunch of questions they ask you, not only about citizenship, but one of those is, are you a professional trader?
Yeah.
And so now they know your retail.
But they already know your retail if you sign up for a regular broker with. That's
It's,
not hard to guess that you.
I know, but the point is they have the data. They
Yeah.
know your retail. And what do you want to know? That they put you in those kinds of accounts where they know that typically the odds, it's like Vegas.
Yeah.
Vegas doesn't change how they deal a deck.
Mm-hmm.
The blackjack rules haven't changed in forever.
Yeah.
Right? So, and why is that? Because they play the odds. They know statistically they're going to make 1%. Now they might make more, but they know that there's an X, like a 90 something percent odds that they will make 1%.
Yeah.
And for them, that's enough because you're profitable. That's
Yeah.
enough margin for them.
Also because of the fact that they keep on playing no matter what. Because you go to Vegas or to whatever casino, you go to sleep eventually, or you stop playing and blah blah blah. They keep their desks running because they know the more games they play, the more money they make over the long run, not over the short term. Over the short term, they could lose everything, or not everything, but good percentage. But as long as they keep on playing, they will eventually win. Same way with trading.
Well,
but not that simple.
Yeah, good point. Excellent point. They change out the dealers.
Yeah, they simply change. Oh yeah, that person shift is over. Yeah, let's get Michael on.
Yep. And they look at the day and they're like, okay, Michael's really got a skill set for making the market do X, Y, Z. So let's get Michael in there for the execution side of it.
Yeah.
And and they've got all the pros. I mean, they spend billions of dollars over the last X amount of time to study how to steal money from us.
Yeah.
Because they have, they have the unfair advantage. The odds are in their favor.
But
That's
yet,
why, how quick it is and how easy it is to actually get set up with an account. It's like
yeah, of
you
course.
basically have to be breathing.
Yeah. Like, oh yeah,
That's always a
here's
red
a
flag, right?
$1,000 bonus if you take your first trade.
Yeah. Yeah. Oh, hey, you know what? Let's finance you. We could just sign this. We're all good. We're
Yeah.
gonna finance you right now. Like, really?
We're gonna put
That's
$1,000 that you will never be able to withdraw from the account. So we just put paper in there, basically. And yeah, we know you're not gonna make it. 95% chance, 95% odds that, well, we got you hooked with our bonus. But yeah, 95% of the time, that bonus got you hooked, and we're just gonna take your money from your entire brokerage account. It's a win-win with a 90% win rate. It's like owning a prop firm. Only thing that can hurt your prop firm company is having too many profitable traders in there, and not enough traders that lose challenges to make you money.
it's interesting because I believe in God and I have a relationship with Jesus. That's my God, and I believe in spiritual things. I believe, in fact, most of life is actually runs on the spiritual plane
Mm-hmm.
and vibrates and all that kind of stuff, right? And it's the unseen stuff, and that there's the communication going on that we feel, but we are trained out of it as we grow up. At least the European American cultures, right?
Yeah.
There are some ancient cultures and stuff that have stuck around that still believe in that. In fact, most of human race didn't. There was no atheist. That's the new thing. So knowing that, I just got a text, right?
Mm-hmm.
And I want to share this with you. She's my tax accountant. She's incredible. She used to work for the IRS, retired after 30 years, and is literally the IRS messes with her clients. She just picks up the phone, calls the right person, and the IRS agent gets fired.
Yeah.
Okay, so I love this woman. So yesterday I was feeling just that thing, right? Like, I need to reach out to her. So I sent her a text and said, "Good morning. I just had this feeling that I need to reach out and ask if you needed help with anything. I don't know in what category. I'm an IT guy. Maybe it means nothing. But just let me know. I'm happy to make myself available. I don't need work. I have a full-time job. I'm not looking to get paid at all."
Mm-hmm.
She's like, "Who is this?" Because I got a new number. So I told her, and today, literally just seconds ago, I got a text. "Oh my goodness, I do need help. It is required that I employ a security plan. Part of this plan includes IT security. Can you help?" I just held a meeting with my employees yesterday, which is the same day that I texted her
Yeah.
to discuss cyber internet email security. The IT portion is where I falter. What? How can you explain that? I haven't talked to her in like a year. I don't know anything that's going on in her life.
Yeah, I don't know how you would be able to explain that. There would be that one party who would explain that based on probabilities and odds.
Spiritual connection. The odds of that happening,
Slim.
I'd love to get a mathematician on that.
Yeah,
Pretty much impossible.
it's pretty much impossible. I agree with that. It's like when I was over in Australia, traveling around for 3 years. How big are the odds that I move in with someone from my tiny ass hometown here in Germany, and I never
Right.
even seen that person? Same age group, same plans going over to Australia. Never heard of him. My parents knew his family, but for some reason, yeah, we happened to move into the same dorm. I'm like, come on, like,
Yeah.
what are the odds? Like, oh, where are you
Yeah.
from? Yeah, from a small town near Munich. I'm like, I always say that. Shut up. Where are you really
I've
from?
I've always found that it takes more faith to believe that there isn't a intelligent being that's part of this whole design.
Yeah, I'd say
It takes
it's.
more faith to believe that there isn't anything than all the evidence to show there is.
I brought it down to if I meet thousands of people on my journey and move into hundreds of dorms, I know the probability is still close to nothing that I'm gonna meet someone out of my 10,000 people hometown here in Germany, but it's there.
You know, I saw a video done by an atheist NASA scientist who developed satellites.
Mm-hmm.
And one day he got the idea to take the same type of technology, but then go micro, go inside the womb and video and take pictures of the formation of a human life from beginning to end.
Yeah.
And he's a mathematician as well. And as he documented his findings, he said statistically what I saw happen is impossible. 3 times he said this human life, the formation of one human life,
Hang
is
on
impossible.
1 second. I just wanna,
I'm watching. Yeah, go.
because we have SMT divergence. We saw NQ making a higher high and ES didn't, and now we're starting to reject. I was watching out for that once I saw that NQ took out the high right here. So this could be a potential
You get on that
short-term,
1 minute fair value gap if it closes below.
long-term
To
top.
the 1 minute,
Could be.
that'd be a low risk.
That would be a low risk, yeah. But we're still in
I'm gonna
this
try it.
chop right here. I'm gonna wait for.
$150. I'm not worried about that. I'm up 1,400. See if I can get an early entry.
No, I'm still in my long.
You are? Oh yeah, you're micro.
No, CFD mini. 1.5 minis.
Oh,
But I got a good
nice.
entry, so I'm just gonna buy up some more retracement.
I
But I
think you're
just
right
moved my
about
long.
that inversion. See, this
Mm-hmm.
is where I was so tempted just to hop in with a market order, and I'm not doing it. Nope. I'll miss the move. Oh well.
Yeah, you missed the move. Move 2 ticks. Oh, I missed the move. Yeah, now it's too late. Now we're just getting the structure shift confirmation on the 5 minute.
Oh well. We'll see. We'll see.
We mapped that out. We saw it in time, that SMT divergence at the highs. We still had our 1 hour bearish fair value gap up in here.
Watch it reach close. Oh wait, you're on the 5. I'm watching the 1 minute. So we've got a couple nice 1 minute fair value gaps above there, which on the 1 minute is slightly above or around the 9 EMA on the 1 minute.
1050 and 1110. So that's even within the macro where we saw that SMT divergence right at the high. But yeah, just be aware that on a higher time frame, yeah, we could be getting a market structure shift right here. But on an even higher time frame, could happen to just be a pullback. So there's always the possibility that it's not going to be the high of the day. And it's just going to be another pullback before we continue higher.
Well, you know, we could look at that. I mean, I like doing the fibs on the 1 hour or the 4 hour, and then seeing if it's hitting the 50 or 68%. Yeah, see.
Now let's wait for this 5 minute candle to close. Looks like we're going to get the confirmed structure shift. We still have a untouched volume imbalance right here.
Can I whack it? Yep, there we go. All right, let's wait. Let's see if we get a nice little entry opportunity. I missed it on the 1 minute. We got a nice, yeah, there's that fair value gap, yep. So look at all those beautiful fair value gaps up there in the 1 minute. I'm gonna try some martingale stuff here. See if I can get at least one of them to hit. See if all three of them hit, I'll pass this challenge. 2 of them hit. But no.
Like I said, I'm gonna switch short once we close below this 5-minute bullish fair value gap. Until then, I'm still firm believer that we could go higher. Once I see the close below here, I'm targeting sell side and a deeper retracement in today's range. But we saw it live, SMT divergence, market structure shift, not with the opportunity to get in on the 5-minute time frame other than a market structure shift entry. I think we're already below the lowest 5-minute bullish. That's the 15-minute. Let's keep an eye on these 2 down closing candles. Because if we continue to go higher, we should see support here. Like said, I'm not doing 1-minute market structure shifts anymore. At least not on stream. I'm waiting for the bigger picture to paint and then take an entry on that. And I'm also not trading on my Apex account, so I have that room to breathe without having to worry about intraday trailing drawdown.
Yeah, let's see.
Yeah, we hit that
See
1
what's
hour
up.
bearish fair value gap nicely.
Sometimes you miss.
Depends what you define as a miss.
Entries.
Yeah, but I think the opportunity isn't missed yet. Maybe to get in at the very high, but you're gonna miss plenty of those.
Well, my finger was on the trigger and I didn't pull it because, yeah, it was an early entry. Oh well, I'd rather do that and be out of the trade than have a bad habit or break, than continue in that bad habit.
Let's see. Market structure shift and the final invalidation for me comes once we break this low. And hold below it. Then I have a proper breaker block to use on ES. Then I can target the low of the day without any issues. We still have the same old inefficiencies right here. Can still capture my 10 points with that very easily. Consolidation at the top, back below our 4-hour bullish. SMT divergence at the high between ES and NQ. Back to the VWAP. Then I'd be looking forward to, once I see that break, to look for a head and shoulder play. Back into the low of the day.
Too many inefficiencies, man. They're going to come back up for that, my opinion.
Yeah, sure. At least one of them.
In fact, it would be fun to get a little buy in here as it goes back up to get those inefficiencies.
So we just hit the VWAP. Yes, it's just a little bit weaker than NQ looks like if we look at them side by side. Can look at the same volume profile once again, right here, from this candle to this candle. Volume, basically
Wow,
no,
look at that.
no volume right here and all the volume up here. That's trapped volume up high. And we move away from that quickly. Same goes here for NQ. Let's check out the 15 minute. The 15 minute is closing in 10. The 1 hour, 1 minute.
Okay, captured a little scalp on that buy. Okay, let's see. See all that support to the left too, so it wasn't going to break that too easily.
No, not before.
It's got to go up and capture some more to fuel the fire.
SMT at the highs. NQ still holding this bullish value gap here on the 5. 15. Yeah, like I said, I'm going to be waiting for the 15-minute market structure shift confirmation. Look for an entry on the 5-minute here somewhere to the left. But before I don't see that confirmation, I'm not going to target more shorts. Potential is there, and the potential for more than 20 points back to the midnight level is also still there. So, no. I'm also going to end the stream now. We've been at it for how long? Also losing viewers.
You're not gonna stay with us to do that high quality short, or are we out of the kill zone?
Yeah, we're out of the kill zone too, so that marks the end for me. Alright guys, thanks so much for joining in. We'll be back. No, not tomorrow. Tomorrow is NFP. We take Fridays off on NFP. 2.5 hour stream. Hope you've learned something. And yeah, take care until next week. Alright.